All right, we're going to start off with markets and the economy. I'm going to hit the performance first. So we're looking at the 2023 first quarter market performance in the main categories here. So the way this chart works, you've got Q1, which is on the left-hand side, and you've got year-to-date, which is on the right-hand side. And as you can imagine, being the first quarter, year-to-date, the numbers look the same. But let's go on. Looking at the U.S. equities, as you can see, U.S. equities really had a very nice first quarters, as well did international equities, being the leader, up 8.6%. Then you get into emerging markets equities at 4%, and then followed by U.S. bonds, international bonds, and emerging markets. So let's move on and look at where the indicators are. Most of us have seen the City National Rockdale economic and financial indicators. And these indicators are really 6 to 9 months looking forward. So the biggest changes we saw, one was U.S. economic outlook is moving over to the left. And you also had on the opposite side, international economic outlook, which went further into the red. And a lot of this has to do with the bottom left-hand dial, which is the credit demand availability. That moves solidly in the negative category. Now, you might say, well, darn, how did that happen? The Federal Reserve is trying to slow down the economy. One of the best ways to slow down economy is choke the credit, and that's what's happening right now. Now, let's look at the overall picture. As you can see, at this point, we've got 7 red dials, and the rest are yellow. There is no green in sight. And what we're really looking at here is the dials are just moving slightly every month, which means they really haven't picked up a clear direction on the way they're going. Now, when you think about recession outlook, looking at it from April's point of view, but what we're finding is that there is a greater and greater chance that we're going to fall into recession. And what we're seeing here is on the right-hand side, you've got the outlook, probability, GDP growth, earnings growth. And then sliding down the left side, you can see we've got either an option of slow growth, mild recession, or normal recession. And what we're unfortunately seeing is that the recession odds raised to above consensus, which is over 75%, which means it is very, very likely we're going to fall into a recession from a technical standpoint. There's really no need to worry. You take care of your family and
We'll take care of you. We're ready for the future.